Adena Friedman, president of the Nasdaq. So nice to see you here at our Deal Economy event this year.
Thank you very much for having me.
And so much to talk about the markets. Let's talk about what's happening in the private company space, first of all. It seems that private companies are staying private longer. So what is happening on the funding side, and how has that affected the path from private to public?
Sure. Well, I think there are actually three things that are really driving private companies to stay private longer. First is the Jobs Act that allows private companies to have now 2,000 shareholders before they have to file publicly with the SEC, as opposed to 500 prior to the Jobs Act. The second thing is the fact that there's just a lot of money being put to work in the system. So a lot of money flowing into funds, flowing into venture funds, into traditional funds as well. And the third thing is the fact that traditional asset managers are looking for alpha. So historically, they really concentrated their entire portfolio in the public markets. They're really they're allowed to put a sleeve into alternative assets, and they're finding private companies to be a very interesting and worthwhile investment to make. So there's a lot of more money coming into private companies than there was before.
We have heard that it hasn't been the best year for IPOs. Certainly we've seen some deals pulled. Is that really the case?
Well, there have been 191 IPOs so far this year, of which, of course, Nasdaq has been lucky, and we've gotten 141 of those to come to Nasdaq. There's been also $33 billion raised in the public market so far this year. So it has not exactly been a difficult year. It's just that it hasn't been quite as good as last year. Last year really was a spectacular year for IPOs in terms of numbers and dollars raised. But we still are finding that the volatility in the markets, particularly in the second half of the year, have made IPOs more challenging. That doesn't mean that companies aren't going to go public, but they're looking to wait into the first quarter or second quarter of next year as opposed to trying to go out in the volatile market environment. That said, we do actually have another really great IPO coming next week, we hope, and we definitely see companies still wanting to access public markets every day.
That's good news. Now let's switch gears a little bit. We understand that you recently went to Asia, and I'm sure that was fascinating. What were some of the experiences you had there? What did you see? What did you hear? That might also clarify some misconceptions about what's happening in Asia.
Sure. Well, I'll go to Asia. I try to go twice a year. We have, people don't realize this, but we are a technology provider to many of the exchanges around the world, including some of the largest exchanges in Asia. So I spend a lot of time meeting with the exchanges in Asia in terms of both the largest economies as well as some of the developing economies there. And what I find when I speak with both the exchanges as well as executives in the region is that there has been a view that the Asian economy isn't growing, but the reality is that there are certain sectors certainly that have had more challenges, like the real estate sector or some of the industrial sectors. However, the consumer economy, the technology sector, and the intersection of e-commerce, so consumers hitting with technology, has been an incredible growth area for the entire region, not just China, but also in Southeast Asia as well. So they're very, very excited and bullish on the continued growth in those sectors as the consumer economy grows within the region.
Adena Friedman, it's been great getting an update from you. Thank you so much.
Thank you.